All right, everybody, welcome back. I'm Willa, and this is Willa Trades. For those of you who are just joining us, this is a channel where we're trading together, we're learning and growing together. I've been doing this a little bit of about 2.5 years, gotten more and more profitable. Looking at, just basically showing you guys the steps that I go through to create a watch list, and when I take some trades, kind of sharing the trades with you to show you how they go. So right now we are coming off of yesterday, which was FOMC day, which we saw some wild movement, of course. This is the 1 hour chart. Let's break it down to a five minute chart. So from here to here is about 70 points, and there was some wild movement during the day. But what it looks like overnight, it looks like we had a big move up. So the market finally digested it, and we've seen a big move up because this right here, we're down at the 561 area, 560, 561. And then we moved up basically 10 points in the after hours and the pre-market. Okay, we were able to do a small rejection at 571, setting up a pre-market high. This is SPY for those of you who are thinking, what the hell is he trading? I am primarily trading SPX. That's why we started out there setting some levels. We created a gap. We'll see if we come get this gap before the market begins. A lot of people in this position would automatically expect for the market to sell back off. I am not 100% certain that's going to happen. I've also seen it where the market continues to move after a decision like this. So we're going to be very cautious, and we're going to be watching for kind of like a move down to get this gap, and then watching to see what we do once we get the gap. If before the market opens, we actually find a bottom here in the pre-market, and we come back up and we retest this level, I'm going to be looking for us to do a reject and possibly come get this gap today. Okay, the gap is pretty close. I feel like it's very possible we could get it. My hard bounce area comes in really around this 567 to 56.58, which was a previous all-time high. I'm going to be looking for us to bounce this level maybe, and you can see here if you look at yesterday's highs, this 567 was a resistance, so I'm going to look for that to turn into support and us to bounce that level. And if we bounce, we're going to make that move back up. So just to recap, either if we find a bottom here in pre-market, we move back up, I want to look for a price action to show a rejected pre-market high and come down and get this gap. If we go through the gap, I'm going to be looking for us to bounce the 567 area, probably right below 567, somewhere between maybe about 567.9. 566.9. I'm going to be looking for a bounce at that area and for us to then move up. And at the very least, if we bounce this, I'm going to be looking for to take some off here if we reapproach yesterday's all-time high. And that's a simple plan. One of the things that we do have working for us is that QQQ is not at an all-time high. And the reason that is the case is because while QQQ was driving the market, there was repositioning being moved over to the Dow. So now the Dow may be driving the S&P. So you can see here we had a move up as well, but we're not at an all-time high. We've got more levels above it. Actually have a small supply area here between 486 and 45. So I'll be looking for a rejection there if we get up and over the pre-market high. I'm going to be looking for a rejection there, and then again at 487. I'm going to be looking for one of these candles. Let me show you. Or a series of candles where there's indecision. Maybe a push up and then one more push down. So I'm going to look for that, but I'm going to really look for it on the 5-minute. Okay. If I see this on the 5-minute and it's red, we're going to take it and we're going to try to write it down. All right. That's it for our watch list today. Again, I'm Willa. Please hit like and subscribe. We look forward to trading with you guys one day. In order to do it, we need enough viewers. Thank you.